Okay, so let's get started. I am Shane Handy, the founder of The Rational Trader, and we're going to talk today about the machine learning system that I've built in quite a bit more detail than we did at Thursday's webinar that introduced this system. We're going to do this every week for the next probably 4 to 6 weeks. Okay, so all of the sessions will be posted up on the YouTube channel, so you'll be able to get to all of them. Attend live if you've got questions. The interactive nature of this kind of thing is where I think is a lot of the value. In terms of plans, we're trying to get the installation programs done and out by the end of next week. Okay, and so that means we have this week and next week, this Saturday and next Saturday for sort of pre-learning, and then if we're able to do it, we can have it in your hands by the time we do the third session here. I'm not sure we can make that schedule or not, but we're working on it. I did find one of the key bugs I was chasing down just like 20 minutes ago. So that had to get fixed before we could go live with other people besides just me risking money. And so that's very good news. And then the other problem that makes this somewhat uncertain is the nature of the system is such that there is an additional piece. And that piece is shown on screen here. It's that green rectangle, rounded rectangle, which is the machine learning system. So normally a Sierra chart custom study, you code it, you test it, you do all that stuff, and then you publish it to Sierra chart servers, and it automatically downloads. They've done an excellent job of making it easy to distribute custom code. In this case, we're doing something so sophisticated that you can't do it inside a Sierra chart. So what's going on is there is an actual piece of code, a very complex piece of code that's running. It's a process that's running on your computer, and it has to be running or you won't get any predictions. And the installation for that is more difficult just in general because it's Windows, and Windows is essentially a stupid operating system. You can tell I'm a Unix snob. But also because we're doing something that's on the leading edge here with machine learning. And the machine learning libraries there isn't universal support for them in things like the programs you use to build installers. So I'm trying to work through what's the best way to make it easy to install. And the reason I limited the number of people for the early adoption has nothing to do with the performance of the system and everything to do with making sure I can get everybody installed. And so it's that uncertainty that is the reason there's a limit. Okay, because if worst case, I got to install it manually for everybody. All right, and that's a tedious, time-consuming process. All right, I wanted to start today with this summary about why would we use this, why use machine learning. And I have an actual very clear example of the fifth one, which to me is the most important, in that it's, as a technology, it is, once you have that foundation in place, it's only going to get better. You have the capability, and then you have the infrastructure in order to improve it. And you make changes, test those improvements, make changes, test those improvements, etc. So I'm going to show that in a few minutes. Kind of the thing that I saw last week, day to day in real time, that I was dissatisfied with in terms of the system performance, and then what I did, and then the process I went through to test that and ultimately decide to push that into production or not. Ultimately, though, what we're doing is machine learning is a sophisticated pattern recognition system, and that's what we're doing is we're identifying patterns in the market, and then by using a system to do that for you, you're able to take the human emotion out of the equation completely, which really makes it easy. How long before discretionary human traders are no longer effective? Paul, that's a really interesting question. So it would be reasonable to suppose that at some point in the future, you won't have a human doing this at all, right? It'll be a bunch of different machine learning systems all fighting each other out. I don't know if that's true or not. We'll see. But humans tend to overestimate what will happen in the next 2 years and underestimate what will happen in the next 10. Okay, so it's difficult to predict. This is the first sort of commercial use I've seen of this kind of technology for trading. Sometimes it just takes one person to open the gates, and then there's a flood. Other times, it'll just trickle out. I don't know. It's not easy. It is astonishingly difficult to get this to work well. Does your system identify patterns that you cannot perceive? Depends on what you mean by perceive. I've learned things from this machine learning system that I did not know before. The problem is that what we're doing is, and so let's talk about this. Let's talk about sort of exactly what are we giving to the machine learning system. Can I do that? I need to bring that up. Hold on. So let me. I'm a little unprepared here for that question. Let me open just like the normal chart book here. Hang on, I need an instance for that. Hold on. So while this is coming up. We can discuss what else we're going to do today. So we're going to talk about the architecture, the overview, how all those pieces fit together, and then we're going to get into specifics on, well, exactly how would you use that system on a daily basis? Okay, so those kinds of questions, and then anything else that occurs to you, just bring it up and we'll talk it out. Let's let this load up, and then we'll begin with a description of the information that goes into the machine, the input side of the machine learning system. Ultimately, it's only as good as the data you give it, right? So if you give it information that has some correlation between itself and an outcome, then the systems at these point are powerful enough to find that relationship. And if you're able to generalize it enough, then you can apply it to new data. And this is kind of the challenge that machine learning people have, is the systems are so powerful that they can memorize the data you give them completely, and then they're useless outside of when you give them new data. So what would be useful to understand then is, well, what is it that we're giving to the machine learning system? What's the data we're giving it? And the answer is that it's my view of the wave volume and order flow data plus some additional stuff. Okay, and so if you're new to the rational trader, it would be very good to go spend a couple hours watching the introduction to wave volume and the introduction to order flow tutorial videos that are up on YouTube. Right, there's a playlist for them. Okay, and that'll give you a sense for what we're doing. All right, but basically, if you look at the market, there's buyers and sellers, and for every trade there is a buyer and a seller. But one of them is being more aggressive than the other. Hang on a second, Dan. That's a good question. One of them is being more aggressive than the other. All right, and you can tell that in the data. And so what we call the bid volume is when the sellers are being more aggressive, and the ask volume is when the buyers are being more aggressive. All right, and so we use that information, who's being more aggressive, and then what is price doing. If the buyers are being more aggressive and price is advancing, then there's an expectation the market will go higher. If the buyers are being more aggressive but price is declining, well, then that means that there's a bunch of sellers that are hidden, that are absorbing all of that buying. Okay, and all of this is discussed in detail in the wave volume and order flow tutorials. So go watch those if you're not familiar with these concepts. This is the chart that I use as a human, all right? And so a lot of these symbols on here represent the things I just talked about, absorption and momentum, okay? Looking at the volume in each of the waves and how they relate to each other is another key thing that I do. Okay, so that's also input to the system, as well as just the price action. So a good example would be, you can see, like right here, the market advanced and came down but didn't go lower. This bar closed up, because that's a key price action pattern you need to be paying attention to. All right, so I give that to the machine. Now, I don't tell the machine learning system this is important. I don't do that. I just gave it the data, and what I see is that it finds trades that I would have found. So I find that encouraging. It's okay, yeah, that's what I would have done right there. And then it does stuff that I had not even thought of, and it's been doing it fairly well. It does things not as good as me. All right, and so that's the area that I'm focusing on for improvement. So anyway, order flow data. The key things about order flow that the Rational Trader built over the last 4 or 5 years as input, and then some additional information about how is the current bar behaving relative to the current wave. How is the current wave relative to the previous wave? And so there's this concept of the amount of order, the amount of bid and ask volume per bar per wave, and the speed with which it's moving. All of that's kind of thrown into the machine learning input bin. And what comes out the other side is this prediction. Okay, so Dan is asking, will you be able to run the machine learning system and also trade manually at the same time on the same machine? Okay, so you cannot trade on the same chart. Okay, when you enable auto trading for the chart, it takes over, and if you try to do anything, it immediately cancels it. Okay. So if you wanted to do that, you would have to have a different chart. Okay. If you're trading the same symbol, that's a problem. Okay, because the auto trading system might want to take a trade. So certainly you can trade like the ES manually and the NQ manually or the NQ in automation. But to trade the NQ in automation and manually at the same time, I'm not entirely sure how you would do that. You'd have to, if you wanted to take a manual trade, you have to turn off the auto trader. Now that's easy to do, and you can move stuff around yourself on the auto trader. But if you're placing orders, the auto trading system is looking at that, going, "Is that allowed?" And if it's not, it'll kill it. When you say speed, do you mean ticks per minute? Actually, it's seconds per tick. Actually, how long does it take the market to move one tick? How long did that take on average, per bar, per wave, that kind of thing? Okay, there's a bunch of questions. Let's walk down them. So the bid-ask volume data from Infinity via Sierra has been known to be inaccurate for a long time. Are you aware of this? So Al, there are certainly varying qualities of data from various providers. In fact, every single data provider has different values for the data. There does not appear to be one objectively correct value. A long time ago, the data from the Transact data feed was not good enough to use. I didn't use it. I used to pay for the DTNIQ data feed. They fixed that to the point where I found it to be good enough. Dan, the answer, the basic answer, if you want to trade manually on the same symbol, is that you call up the broker and you create what's called a sub account. It's basically a different account inside your account, and then you just trade that sub account. That's how you do that. Let's see other questions here. If an investment bank with unlimited resources creates an AI program more advanced than all the others, what would prevent it from essentially conquering the market over time? Paul, did you attend Thursday seminar? I don't think you did. Or go watch it again. The basic answer is, look, these systems are very, very specific to do one thing, and that's it. And there's a zillion ways to trade. So I'm not at all concerned about some super smart machine learning system taking over the world. It's not going to happen. Can you see when the system is about to take a trade? No, actually, you can't. It just you can assess when it's going to make a prediction, but you don't know what that prediction is going to be. Obviously, that's the nature of a prediction. So yeah, you'll get a sense. As you go through these sessions with me, you'll get a sense for when is the system making predictions versus when is it just not. Okay, that's related to the understanding the behavior in the market and looking for specific behaviors. So we'll identify exactly what specific behaviors we're looking for, and you can expect predictions at that point. And whether that prediction is do nothing or get long or get short, you don't know that. Let's see. Are you scrapping your manual system, Robert? Yeah, you and I were chatting via email. I'm no longer trading at discretionary. I'm doing this now. In the trading room, the service in the room, the rational trader as a service is transitioning to something that's based on machine learning. So I'm 90% focused right now on the machine learning systems. Glenn, you have a long question. Let me read it first. All right, so Glenn's basically asking, look, he's concerned that it's too hard to operate. It's not. It's no different than driving a car. All right. If you understand, when you get into the car, you know that the steering wheel turns, and you know that when you put it in drive, you're going to go forward, and you put it in reverse, you're going to go backwards. So we'll take care of that with training. You don't need to worry about that. Are the entry orders market orders? No. You could do it if you wanted to, Wayne. But I implemented limit orders where you get to decide how far back you want to place that order and how long to wait before that order is filled before you cancel the order. Okay, we'll go over that. I lost the beginning of the training. In the screen you are sharing, are the green and the red entries? Oh, I'm sorry, Glenn. No, this is Giovanni. This is the manual system. Sorry, this is the auto trading system. What we were discussing was that the input to the machine learning system, the data that we give in, is very, very closely related to the data that I used to use as a discretionary trader. Is there a training? It will be completely turnkey, Glenn. But you'll have all the options that you can tweak if you like. All right. Is there training already on how to use your software, or will we receive just a signal from you? No, the software is going to be installed on your computer. You've got to know how to operate it. Will it ever be applicable to larger time frames, 1 hour, 4 hour, daily, to trade the industry swing trades? I haven't done that. I mean, Brian, conceptually, it's not difficult to change the training of the system to do that, but I haven't done that. Will I ever do it? I don't know. I don't have any plans right now. Should you consider a VPS or a VPN server for reliability? I wouldn't. I think my systems are more reliable than some random system somewhere else. So they're Wayne, we'll go over it, Wayne. You'll see. Yes, you can move the stops around. You can drag them up. Yes, Randy, we automatically, the Sierra chart system gets, when it takes a trade, it does what you told it to do, and you better have told it to place the stop and target orders, or you're not being a disciplined trader. So that's certainly the default. It automatically places that. And if you watch the daily videos, you'll actually see that happening. There's no such thing as a dumb question, Dan. Just keep asking. Since you're auto trading, what do you do in the room every day? So right now I only spend an hour in the room anyway. So it's been this way for a while. You spend an hour, and then the students or members would trade the markets themselves for the next hour, and then we'd compare notes the next day. We're kind of doing the same thing. I start before the markets open. We'll make sure that everyone understands whatever settings are there, answer any questions, and then I chat with the members about what we've been doing. This is what the last really 4 or 5 weeks has been like, because this has been about to go live for a while. We ran a real-time simulation for 2 weeks before last week going live. And so we're talking about, this is what's happening, this is why it did that, or this is why I think it did that, or I don't understand that, that's a bug, I need to go hunt that down, that kind of thing, because it's new enough that it needs a little hand-holding. But it's done, let me make clear, it took every single trade by itself last week, every stop, every target. I never pressed a button, not once. I was really pleased at how well it worked live. In that respect, that piece of how it executes it was perfect last week. Will the computer slow down my computer? No way, Steve. The training of a machine learning model is incredibly computationally intensive. The training, but the prediction is instantaneous. It's so fast that I can't time it. That's how fast it is. Okay, so there's no worries there. We have a lot of storms in this area and power loss. What happens if the trade is open when the power goes out? This is a really good question, Chris. It's the biggest problem that needs to be addressed or dealt with. All right. What do you do now if you have a trade on and the power goes out? That's kind of the first question. My goal is unattended trading. That's my goal. I want to turn it on and I want to turn it on and walk away. I said no, didn't I? It's not going to start again, is it? Rats. It's starting a replay. It's unfortunate. But the biggest problem is, okay, you lose your internet connection and there's a trade on. What happens? Okay, so to me, what we want the system to reconnect when that internet connection comes back. I see Sierra chart properly connect. I don't see us reconnect to the trade service correctly. In other words, I don't see us reconnect to the Infinity trade service correctly. So I think that's them. I don't think that's me. Worst case, you have to have that daily risk limit in place with your broker. Okay. So you have to plan for a catastrophe. A catastrophe is the power goes out, everything goes down, and there's a trade on. Okay. So worst case, I have a daily risk limit set up with Infinity. If my account gets down that many dollars, they flatten it. Okay. I have in here, as part of the Sierra chart system, it's $155 is what I'm willing to risk per day on a $5,000 account. My daily loss limit with Infinity, you should set it to like 160. Mine's at 200, but and so worst case, you'll just take a max loss that day. That's what the worst case should be. If your broker does not implement a daily risk limit like that, you need to change brokers. You should not auto trade without that. Okay. Let's see. Actually, there were so many questions they scrolled off. So I guess we're doing mostly a question and answer session today, and we'll get to what we can. Let's see. If we want to use a scale out plan on 2 contracts, can we just use Sierra orders, or does that have to be programmed into the John? No, you just use the order here. So I'm using a simple bracket order with a target of 30 and a stop of 10. There are a huge number of order types that you can implement with Sierra chart. The machine learning system, I did this on purpose. All it does is tell you do nothing, get long, get short. What you actually do, all that's done by just the built-in functionality of Sierra chart. So you want to learn those order types to understand how they work, okay? Because ultimately I'm the same. I don't want to just trade one contract and either make 30 or some small amount. I'm hitting 10 ticks a lot. It would make sense to me to trade more and scale out at plus 10 and then leave the stop where it's at and to give the market more room. But anyway, exactly, Chris. You call the desk and close if you lose your internet connection. So if you need something, you've got to deal with this issue. If you lose the internet, that issue has to be dealt with. Either some notification that you've lost internet, or you need a safety net to make sure that you can't blow up your account just because the internet went down. Does the system pick targets and stops, or is it the user's problems? Robert, you define here, right here, if you look on screen, this order is what gets executed because that's what I told Sierra chart to do. You get to pick it. Again, all the system does is say, all the machine learning system does is say, get long, get short, or do nothing. If it's get long, there's an action that's issued, and if you've said I'm interested in that action, then the Sierra charts spreadsheet trading study will take over and place the order. Old neural network programs did not seem to work very well, and I was wondering if you're actually using newer deep learning technology. Yes, this is definitely deep learning. Brian, all of this stuff is on. So Brian's asking about he joined and wants to get charts and all that stuff. It's all up on the website. Just read the welcome message, and it will walk you through how to download everything and install everything. Okay, all that's just standard stuff at this point. Will we be able to help create more data as a group to help the process become tighter over time? No, the data we're using is all the data from the exchange. So what you can help is, if you want to help, is you could identify areas where the system behaved in a way that you didn't like, and it's something to look at. Where the OCO order is held, OCO is one cancels other, so that's the bracket order that's placed with a stop and a target. Where that's held is important, if it's on the server or on the client. The actual for Transact, the actual orders themselves are sitting at the exchange, but the logic that ties them together is on the client. It's on your computer. And so the danger, if you are in a position and you lose internet connection is that one of those orders will execute, like the stop order will execute, but the other one will stay there because it's the client that says, hey, one of my orders got filled, cancel the other one. So that's the problem with losing the internet connection. Daily risk limit means they flatten but also reject any new. Yes, Giovanni. Daily risk limit means that they flatten. What if infinity goes down? Well, then I don't know what to tell you, Walter. Not that I've ever seen that, but are you using bar by bar data for training? Yes, I guess. We start with the tick data. Robert, we answered that question. Russ, what you're describing won't help you. Russ is talking about putting in power, power backup systems. It's not going to help you if you lose the internet connection. Okay, so Daniel, does this work in other markets or just the NQ? You want a model built for that market. Okay, so there's a model built for NASDAQ. It's getting updated every week. We're going to go over that process in just a minute. The ES is planned. In fact, that model will be running tonight. And then probably CL is next. Okay, and then we'll see what we'll see about after that. Would you have to be near your computer while it's in auto mode? I'm not, Rob. I leave. I physically leave. It comes back to how reliable is your internet connection and how upset are you going to be if you lose connection and you end up taking a maximum loss that day because of it. All right. To me, that's just the price. That's the price of unattended trading, is that occasionally you're going to deal with this problem where you've lost the internet connection and you end up taking a max loss that day instead of whatever else you would have gotten that day. The instructions to use it are not available now, Giovanni. We're kind of building them right now. All right, so we're going to do this session every week now for the next 4 to 6 weeks, and by the time I give you an installation program, there'll be documentation, but there'll also be these tutorials online you can go watch again. Is there a point where some of the older data needs to be dropped because of relevance? That's a good question, Daniel. I don't know. There's no extra charge for additional markets. No, Chris, that's a good question. I see other people doing that. Sierra can send an email if the connection goes down for those that don't know. Thank you, Al. I didn't know that. You mean the Sierra chart software? That's a useful feature to know. Hang on, that's a note I got to make. Because that's really what I want to know. If the network goes down, I want to log in and check. That's the other thing I recommend if you're going to do unattended trading is some service that lets you remotely log in to your computer. Okay, so let's stop for the moment and look at. Let me stop this here. And look at the system itself. So let's get back to our presentation, and you'll have opportunity for more kinds of these kinds of general questions in the weeks that come, and feel free to ask via email as well. So let's get back to here. In Sierra chart, there's a custom study. I'm going to show it to you in a minute. All right. It sends the data to the server. I'll show you that in a minute also. Okay, the server gets the data and it does a bunch of work because you have to format it in a very specific way in order to use it. And then it sends back a prediction. This is key now. The prediction is not just get long or get short. The prediction is this is the behavior that I saw and this is what I'm predicting. Okay, and so we're gonna use that to help us decide how conservative or aggressive we want to be, okay? The spreadsheet study for trading is the study inside Sierra Chart that actually does the work of placing orders and all that stuff. Okay, so you have complete control over that. If you want to use different stops and targets, just change that system. You want to scale out, change, it's all there. All right, I'm not an expert on that by any stretch. All right, so let's start with the custom study. Let's go take a look at that real quick. And see, now these are the studies on this chart. This is the production chart that I used, that I used. This is what ran last week. All right, there's a bunch of studies in here, all of which are needed because they're part of the data that gets sent to the engine for prediction, okay? But the actual custom study is right there. It's the bottom one, okay? TRT ML Predict. And it's got a bunch of stuff in here that we don't need anymore. It was part of development, but other things are key, okay? The two things that you need to be concerned about are the top one, which is reversal amount, and send data to engine, and the bottom one here, time ranges. So just these three, actually: reversal amount, send data, and the time range. Okay, so let's talk about each one. Reversal amount is what's governing these lines here. Okay, it's the wave. If you're used to the zigzag study in Sierra Chart, it's what defines when a wave completes. So wave volume is really important to the rational trader view of trading. And what we typically do is we set it to twice the bar height. Okay, and really what you want is you want to capture the waves. All right, so if you set it too big, then you never get any waves, and if you set it too small, then you get so many it's too noisy. So that setting is I've set for you. You can play with it if you like, but for the most part, you're just going to leave it alone. The other one was let's see, here we go, settings. So send data to engine. So you can, if you set that to no, it's not going to send it out for prediction. It's a way to control whether or not you're going to get predictions back. Okay, so definitely needed for development. You don't necessarily need it now. You have other ways to stop the thing from trading. This is what you really care about. We'll talk about that as well, but that's what that means. Send the data to the engine for prediction. I'm looking at questions. Could you repeat the last comment, Phil? I'm not sure when you said that, so you're going to have, I need more context. The wave study has nothing to do with Renko, Robert. Go watch the introduction to wave volume tutorial up on the YouTube channel. All this other stuff is handled elsewhere. Time range. So this is part of the I want to be able to turn it on and walk away functionality. So that says I'm only going to send data to the engine for prediction between 6:35 and 9 o'clock in local time zone, or at the time zone on the chart. Okay, so that's what I do. Every day I turn it on and I let it trade from 6:35 to 9. You can get pretty granular. You can go 6:35 to 6:55, 7:05 to 9 o'clock. The system has been trained on data for the morning session only. What I found was that the data during the doldrums the movement during the doldrums is very sideways and ugly and hard and not predictable, and stay away. We were talking about, okay, Phil, I see. We were talking about if you lose the internet connection. Al was saying that the software can send you an email, assuming the network connection comes back. So I made a note to look into that. I'll build that in if that's the case. Okay, so the final thing here is this subgraphs to send. And you should never touch this, and I have to consider whether to just completely remove it. That's the data that's getting sent to the engine, and it's it's very particular. It's got to be exactly correct. So I'm thinking about just removing it. The reason you leave it is it makes it easier to implement changes down the line, but I think that's probably going to come out. So the key things for you guys, the reversal amount, which you're probably not going to change. Whether or not to send the data to engine is probably just going to stay yes, because you can control whether or not you take trades other ways, and the time range, when to start sending data to the engine for prediction, and when to stop. Okay, all of this has been burned in now, works perfectly. Okay. Can we run this in sim mode? Yeah, Daniel, I ran the whole thing in simulation for weeks. Does the data sent to the engine only get sent upon completion of the bar? Yes, I just wait for the bar to complete. I never make a prediction mid-bar. So you pick the daily range that you want to trade as also the learning period for each day. No. Okay, so you as a user, Daniel, you're going to decide, I want to trade from 6:30 to 8:30, and you put that in and you do it. Okay. I trained the data that I gave the machine learning system to learn on was from 6:30 in the morning to 9 o'clock, the first 2.5 hours. And there's a very, very specific reason for that. Hold on. I'm starting to lose my voice, so I got to get some water. The data very clearly shows that most of the movement in the market is the first 2 hours. And so that's what we want as traders. We want to participate when the market's moving the most. I've also seen lots of turns set up in that 30-minute period between 8:30 and 9 my time. So that's why I included that 2.5 that extra half hour. Daniel, as part of training, I mean, we'll show you how to do it. I mean, you absolutely need to know how to run in simulation, how to run live, and then how to run replays, because there's a lot of switches and dials that you can change if you want, and you shouldn't change that and just go to town. You should change that and then test it, and you do that by replaying the chart. Did this clear? So this is a good example. This is a replay run of last week. Okay, so I looked at last week, day by day, and what I saw was I didn't like the way the system was handling choppy conditions, and I didn't like the way the system was giving back profit after you have closed profit, money in the bank, and it was giving it back. I didn't like that. So I made a couple changes. This is sort of in line with our discussion about incremental improvement. And then I ran a replay to see, okay, well, how did that work? Was that better or worse? Clearly better. That's a closed PL of 565. So doesn't mean I'm gonna implement that change, but it's input to continue investigation. All right. So if we go back to our presentation somewhere. That's the custom study. There's just a handful of switches for you, mostly the time range, and that's it. And then it's going to send data to the engine, and you need to start up the engine. So let's take a look at that. What does that involve? The engine's sitting right here right now. I'm going to start it right now. This is it. All right, now it's going to start. You'll see it loading some models. It'll spit out some data, some messages. In production, what you will have is a directory where you need to install the new models every week, and that just means copy the file there. Okay, and that's it. And then start up the server, and it'll start up just like this. You'll see here it says info, loading, pullback short model, loading, turn model, load. There was a pullback long model in there somewhere. All right, reading the normalization factors, don't worry about what that means, and then starting server, and now it's ready. Okay, that's it. And now you just leave it. I leave it. I like to see it, so you just leave it there, but don't close it. Do we need to run Python? Well, you will be running Python whether you realize it or not, Daniel, but you don't need to be worrying about it. What was the closed P&L from live trading last week? It was down $100, something like that, Abraham. You go watch the daily video. I didn't actually tabulate it. It's one of the reasons that I was a little dissatisfied. I was up quite a few times and then gave it all back and saw some ugly behavior in the choppy markets and wanted to make some changes because of that. There's also the discussion about making sure that you are looking at it not on a trade by trade or even a day by day basis, but on a much larger time frame. We had the discussion in the presentation on Thursday about making sure that you judge the baseball team by the season, not by the game, because there's a large random element in trading, and so this is a case here. Nevertheless, I saw clear opportunity for improvement last week, so this is why I'm implementing. I've been going through some tests this weekend. What about those stupid Windows 10 mandatory update reboots? Is there a way to avoid them? Boy, I don't know. Can somebody call Microsoft and find out? I use Windows 7. Okay, so the server's here. Your job as a trader, as a user of this system, is copy the models into the directory every weekend, download them from my site, copy them in, start the server in the morning. That's it. Then it goes back to the spreadsheet study, and this is where it's easy to get a little overwhelmed. Okay, so the first thing we're going to do is, I want to skip. Let's talk about this first, and then and if we have time, we'll talk about market behavior. If not, we'll do that next week. Question from Bill. So Bill is basically asking about the timing of placing a trade and getting fills, and we talked about this. We touched on this in the presentation about the need for testing here, the next to my purple circle, real-time simulation. There's a very real need to make sure that just because things look nice in batch doesn't mean it's going to work in real time. You got to go do it in real time. All right, and there's two reasons for that. One is the delay issues that Bill is talking about, but also because the batch simulation, the program that I wrote to do that simulation is very stupid actually in the way that it manages trades. I did it just to make it easy to code, not because that's how I would actually manage a trade. And so the batch simulation actually goes in at the market just because it's easy. All right, it goes in at the last traded price of the bar. In real time, we get to define that. So let's go look at that. This value right here, limit entry offset. How many ticks off the close of that bar do you want to place your order? Okay, so if you're getting long and the bar closed up, limit entry offset means take the closing value of the up bar, come down one tick, and place my order. Okay, so if the market doesn't come back, you're not going to get filled. All right, and there were a bunch of cases of that happens, and so you've got, as a trader, you have to make that decision. Are you willing to be more aggressive? There are other entry types you can use actually that sort of mitigate this problem between a market order and a limit order. It's called a limit chase order. I'll be investigating it, but at this point I don't know enough about it to teach it. But right now what happens is you place an order, or the system predicts an action. It's an action you've decided that you want to execute on. The system, the spreadsheet system, it's not my system, it's Sierra Chart spreadsheet study, will place that order one tick off the close of that bar. If you're if you're getting long but the bar is closing down, that's essentially a market order. You're going to get a great fill. The value below this 4 is, well, okay, if I place my order, when do I cancel it if I don't get filled? And that says if 4 more bars draw and I haven't been filled, cancel the order. Okay, so these are 2 very key values that you need to deal with and make your decision on. This is what I've been using, what you see right here. It's the same kind of risk trade-off that you make as a trader for in all cases. I can be more conservative on my limit entry. It means I'm not going to get filled as often. I can be more aggressive. It means I'll get filled more often, but I may get stopped on normal price variation. The real value of Sierra chart here is that you can make that change and simulate the result very easily. That's the Sierra Charts replay system. I use it extensively now because I need to see exactly, what is the impact of the choices that I'm making, okay? Does your live, we should make some consideration using your system trading match the simulation, or I don't understand. I'm sorry, Giovanni, I don't understand your question. Okay, so the limit entry offset is your first choice to make. It defaults to 1. That's what I put. Okay. I by the way, I wrote this, the code, the formulas that implement this. This is not default Sierra chart functionality. I'm just using default Sierra chart capability. Okay. So if the system, I told the system I only want to place limit orders, and then I told it how I want to, what price level to use, all right? And that price level is 1 tick off the close of the bar, okay? Then I told it, if I'm not filled within 4 bars, I want you to cancel the order. And so that's what happens. That works perfectly. It's been tested extensively. We're gonna skip noise filter for the moment and go down to max daily loss and gain. The red cell is what is the dollar loss I'm willing to take before I stop auto trading. The dollar loss. Okay, and so it's I'm willing to lose 3 trades, which is for the Nasdaq, for me that's 10 ticks per trade, $5 per tick, $50 per trade. So I'm willing to lose 150. So that's set to 110, which might seem a little odd, but when you think it through for a moment, you'll see why. I want the system to, if the system is down two trades, if I'm down 2 trades on the day, I still want it to take the next trade. But I don't want it to take any more. And so if you think about it, if I'm down 2 trades, that's $100. I want it to take the next trade. So I could set that to 105. Go ahead and take the next trade. And then if you lose, then you're now exceeding this value, and so the system will stop auto trading. I made it 110 to deal with cases where you get some slippage. Oh, does the live trading match the simulated quite well? Giovanni, we don't know yet. I've only been live trading for a week. That's the problem. That's why you get this early adopter discounted price, because I don't have enough data to say, this is worth the X amount of money. So I've got 1 week worth of data. One week's worth of data of trading a live account with real money. Okay, the daily videos are up every day, and you can watch them and see. And the account I'm using for this is only used for this. So I'll be posting those statements as well. So you got, it's completely transparent. So we don't know the answer yet, Giovanni. And, once I know that answer, then it makes it easy for me to say this is worth X amount or not, right? I use a 30-tick target, Robert. My analysis showed in the NASDAQ that sort of the average move was 36 ticks. So I used 30. Which is curious because I used, as a discretionary trader, I used 40 ticks, but 30 ticks is what I've been using. If you watch the daily videos, what you'll see, we clearly are finding really good entries on nice moves, and 30 ticks is actually way too small. But that's up to you. You get to change that. You can trail however you want, using whatever order type you want. I'm using this because that's what I used in training, in simulation, and now in live. So I need to do that in order to compare things correctly. Ultimately, I'll be changing it because I don't like to trail like that. I don't like to target like that. My personal trading philosophy is that you limit your downside but not your upside. And I'm willing to wait. I'm willing to give back profit in order to participate in that bigger move. But we'll see. I mean, it models well at a 3-to-1 risk to reward ratio. So the number below this is new. I just did that today. That says if I get up $400 or more, stop trading. Okay, so it's the opposite. It said, okay, if I get up that much, then I don't want to give it. I don't want to give it all back. And so that's 20 points is what that is. And so in like really volatile times, you may regret stopping that soon. But for the most part, if you're up 20 points on the day, you probably just want to stop. Okay, but you can put that number anything you want is kind of the point. You just double click on this and change it to whatever you want. So if you don't want to stop at all, just do that. Make it 1 million. And it'll just continue to trade. Okay, but all of these values are up to you to put in. This is my defaults. I just implemented this because I saw this repeatedly last week. That I would get up nicely and then give a lot back, and that's just kind of silly to me. If that's continuing to happen, a lot of people do this in general. So we'll see if that's a good idea or not. I need to do a larger test across the entire contract to see if it's worth it or not. How many signals per day? Wayne, that's very dependent on the market conditions. Like right now, it's crazy. There's so many signals. I don't know what the number is, but if you look at the batch simulation data, which was here, here from current slide, was here. This is the U contract, and if you look down to where my mouse is, that's 3.2 trades per day. All right, so across 65 trading days, 3 trades a day. That seems pretty. I like that number. That's a nice low number. In the Z contract, it was just a little bit less than that. Okay, but then if you look at H, it's like 3 times that. H is 10 trades a day. So it's very dependent on market conditions. I would hope it quit trading. Set it at 1 million. Yes, Dan. Yeah. Oh dear. It's a 10. These are 10-tick range bar chart on this market, Paul. Okay, so Chris is asking, as market conditions change, does the system adjust? Well, yeah, and that's kind of the point. But I think there's some manual work that we can do as well. But if we look at this process here, every end of week, I take that week's data and I plug it into, I add it to all the previous data I have, and I retrain the model from scratch. And then there's this validation process I go through, and then that's the new model. So we're always running with the latest data. So you're only ever sort of 1 week out of sync, I guess would be the way to put it. One of the questions that came up on Thursday I thought was pretty interesting was about weighting recent data more than older data. And I'm not sure if that's the right thing to do or not, but it's a very interesting question. Okay, so back to the spreadsheet here. It's 3 o'clock. We're going to have to take a break soon here, and then actually end. Okay, so the values in the H column, this column you're allowed to change basically as a user in the system, in Sierra Chart's spreadsheet study. I put all this stuff in here, and then what I did was this J column is where things happen, okay, and you as a user shouldn't be touching this. All right, so you're putting in what your limit entry offset is. You're putting in how many bars should I wait if I don't get filled, cancel my order. The noise filter we're going to discuss next. And then you're putting in your maximum loss, which is basically take your real maximum loss and subtract one trade and then add a tick. Okay, and then your maximum gain. If you get up this much, do you want to stop trading or do you want to continue? Okay. The noise filter. So noise filter is this is a tunable value that basically says how much chop am I willing to deal with. You can turn this down and you'll take more trades, but you'll get chopped up more. So the concept here is that when the market goes sideways, we basically want to stay out. All right, the market, it's very unpredictable when the market goes sideways. So if you think about it as a human, you're really good at identifying patterns. I could give you random data and you could find patterns in it. And that's how good you are as a human at finding patterns. The machine learning systems are basically the same on this specific restricted topic. It's really good at finding patterns. And the problem is that if the market is choppy and sideways, then we really don't want to do much until we see that stop. All right, so there is active research that I'm doing on giving the machine learning system a larger view of the market to understand that conditions are choppy or not. And the simulated, this replay you see here is the result of that work this weekend. This the closed P&L for this week would be plus 565 if the change that I implemented in the model, if I was running that from last Monday. So I implemented a change that said, here, machine learning model, here's some more data to help you better understand if conditions are choppy or not. I didn't say stay out of choppy conditions. I said, here's some data. And what it did was it did a much better job, actually, most of the days of producing a profitable outcome. Like on Monday, my Monday last week, I lost money. The replay scratches. Anyway, so it was, that's a better result than I had. I was actually down on the week. So we'll see. I'm going to do some more testing, and if I like that, I'll implement that for this coming week. But there's still more work to do here. So in general, I'm not happy with I'm dissatisfied with the way the system behaves when things get choppy. So I have this external piece of logic that says if it's this noisy, if the noise filter is this much, then don't trade. And the way that works is it just uses a moving average and then looks at the angle of that moving average and says, if the slope is too flat, then stay out. Okay? And right now the markets are pretty volatile. So that number is pretty big. Under normal conditions, I think the noise filter number would be more like a 2 or a 3. Instead, right now, the markets are so volatile that the noise, we need it higher like this in order to, otherwise we're just getting chopped to pieces. Okay. This is a function of the volatility of the market right now. Dan's asking, did I test scaling out basically? I haven't done that. It's very easy to do though. Just change the order type and go in it too. I hit scratch a lot, so it's probably better. But then I don't know exactly, because that means you're taking double the loss. To me, it doesn't matter. Because I can't do it, Dan. I'm only allowed to take 1% risk per trade. That means $50. That's the risk management rule. So we haven't talked about this today. We should talk about it at every session. The most important thing you do as a trader is manage your risk. That's it. What the machine learning system does for you, it's a very sophisticated method of identifying patterns and then executing trades completely without human input. It'll do all that work, all right? It's not perfect. It's not magic. It doesn't remove the random element of the market, but what it does do is execute consistently, much better than a human can do, okay? But you still have to manage your risk, and that means only taking 1% risk per trade. And since I built this for people who are newer traders generally are not well capitalized. $5,000 is sort of a normal starting account size. That means $50 per trade is all you can take. That's 1% risk. If you want to do more, then you got to put more capital in. So if you have $10,000, okay, take $100 risk per trade. That's still 1%. It's the same capital risk, and then do your scale out. Will you do better or not? We could run the test and see. All right, I suspect you would, but it's hard. The problem is the human intuition is that you would do better because you're hitting scratch a lot. But every time you take a loss, your loss is double now, and that scratch amount that you're hitting is only only $50. So I don't know. There's one of the problems here is that people want to take a trade and then get to a point where they're not losing any money because they don't like taking that loss. But that's the wrong way to think about it. You got to think about it the larger time period. Again, it's the baseball season, not the baseball game. All right, we don't judge the baseball team by if they won or lost a single game, or even a streak that they're having, a bad streak that they're having, or a good streak. You judge it by the season. And one of the reasons to use a machine learning system is that you just don't deal with that. It does it for you. You've told it, don't lose more than $150 a day. All you have to do is turn it on every morning. I am not channel trading, Paul. I'm not trading. I don't have the range-bound behavior. Okay. The rational trader is very much about the philosophy has always been, I guess you would call it reversion to the mean. You get extended and then look for that turn and then get to scratch on the way back to the mean and then see if you keep going. Or when you get back to the mean, look for that pullback. So let's switch over and talk about that. We'll talk about action codes, this stuff next week. In fact, let's take a 5-minute break. I need to rest my voice, and I've got my family arriving, so they're going to start making a lot of noise. Let's come back. It's currently 3:10, 3:11. Let's come back at 3:16. We'll spend 15 minutes talking about market behaviors, and then we'll be done for the day, okay? So 15-minute break. Or, I'm sorry, 5-minute break. Back at 3:16. All right, so let's cover market behaviors, and then we're going to go over action codes next week, okay? So what we're doing here is we are looking for specific behaviors in the market, and then we are making a prediction based upon what we think will happen. And we're also assessing the level of conservative or aggressiveness of that action, and that's what those action codes are. Okay, and so if you just look at the market here, let's take this here. This is you can draw any moving average on this market, and you'll get something that looks like that. All right, and it almost doesn't matter which one it is, 30, 89, it doesn't matter. The market's either above or below that line. Okay, and so if it's above it and turning down, then we're looking for a turn short. If it's below it and turning up, well, then we're looking for a turn up. If it's at the line and turning up, well, then that's a pullback. And if it's approaching the line and turning down, then that's a pullback short. All right, so there's three specific behaviors that I'm modeling right now, and that's the turn long, the turn short. Okay, so the turns, whether long or short, they look the same basically to the machine learning system. I don't need separate views of the data. Then a pullback long and a pullback short. Okay, so there's a separate model for pullback longs, and there's a separate model for pullback shorts. And so what happens is, we're assessing the market, and based upon where it's at and what the price action is doing. And so if we're below and turning up, well, then we're looking for a turn. If we're below if we're below but then rolling back over, then that's looking for a pullback short. Okay, do you see? Let's do here. Let's draw this line like this. Okay. Here, the pullback, the turn model is going to kick in because you're below this midline, but the market is starting to show signs that it's coming up, right? So right here, you can see there's a little test right here, and that bar closes up, and then again right there, and again here and here. So these are all turning behaviors that the model has captured and analyzed and built patterns on and will make predictions on. All right, that prediction will either be don't do anything because I can't tell, or I predict that the turn will succeed, get long, or I predict that the turn will fail, get short. It'll be one of those three. Okay, and it's the same thing on the other side. If you look up here, you're above the midline and turning down. So the behavior, right, that bar in particular kind of looks like, here was the market fell off and it tested and didn't go higher and then closed down. That's a turning behavior. So the market, it'll do an assessment there, make a prediction, and that prediction will either be the turn will succeed or the turn will fail. Okay. Down here, you are above that midline and turning up. All right. So that's a pullback long. Now for you and I as a human, that's really easy to see. That's a pullback. We want to evaluate that as a pullback long. Is it going to succeed or not? Now you don't know that. It happens to be this particular day the market's moving up strongly. When you dig into the order flow, what the prediction is, I don't know. We'd have to run it and see. Maybe it'll succeed, maybe it'll fail. But that's the behavior that's being modeled, a pullback long. All right. Now what the data shows across 2 years worth of data, more than 2 years now, is that fully 50% of the time you want to do nothing. There's three obvious behaviors to model. One is the market's turning. The other is it's pulling back, which is kind of the term we use for if the market's advancing, or it's retracing, which is what we use for if the market's falling. And then there's breakouts. So the market's set a level and it's breaking through that. So I've built models for the turns and those two pullbacks, or the pullback and the retracement. There's three separate models that are running live right now. I have plans to do the breakout as well. I just haven't done it yet. Okay, and in fact, the thing I really want to do is set it up so that we are, we're entering on the turn or the pullback, and then adding on the break. All right, so here would be a good example of that if we draw our midline here. The market's pulling back here, and if we can get a prediction long there, we're going to get long. But then there's also a break right there. So then, what I'd like to do is, be in the market on that long prediction, and then if I'm long, and I break through a level, that's an add. Okay, so this is incremental improvement that I have in my head that I'd like to work on. Can't see the screen. Let's see. How about So GoToWebinar is really messing up today. Okay. Should be now. You should be able to see it. Okay, I see. No, I didn't. What Randy's asking is, in other words, it's just emulating your manual system without us having to be there, or is it solely trading on market behavior, or both? It's both, Randy. Clearly, we are. This concept of the turn is something that I use. I didn't tell the machine that though. It just found it. So it's kind of a little bit eerie. Same thing up here. I didn't tell the machine, okay, this is a pullback. It kind of figured that out. Or it showed. It's more complicated than I can explain in just like 30 seconds. But there's a long, involved process of taking the data, giving it to the machine, seeing what the machine does with it, taking the data, changing it around, changing the network, giving it to the machine, seeing what the machine does with it. And when you get through all that process, what you end up with is it finds those behaviors in the same way, in a very similar way that you and I find them. Okay? And so that doesn't feel like a really satisfying answer to me, but that's what's going on. All right. And so what I can tell you is this, like if we look at this move right here, I would expect a prediction in here, but not this running behavior where the market is just gone. Okay. Ultimately, I'll put in that breakout. Is that breakout going to succeed or not? And then we'll have this breakout behavior that you can. It'll be the same thing. You'll be able to choose whether you want to take advantage of that or not. And so the other thing to think about, so kind of along these lines, what becomes clear is, if you look, even this is actually a pretty good example of this particular chart. This pullback is really short. This one's fairly deep. So if I were to ask you, which of those do you think is a more conservative pullback? Which of those is a more aggressive pullback? I think what I'd hear is that one's more aggressive and that one's more conservative. A deeper pullback. What I see in the data is actually sort of three levels. There's like a super aggressive, and then there's another one where the market pulls back deeper. All right, it pulls back more, and then there's another one where it pulls back more like I like. It pulls back pretty deep. Okay, so you have sort of these three levels of pullbacks that occur. Aggressive, moderate, and conservative. All right. And so what I've done is I've defined when we get a prediction from the machine learning system, which is it, how aggressive, conservative, or in between is it? And then you are able to decide, okay, well, I'm interested in this being this aggressive, or I'm only interested in pullbacks that are conservative, or it's deeper than that, because any of these pullbacks can fail. Okay. And so one of the things that I found as I evaluated all of these different behaviors was, aggressive pullbacks that fail that have a fail prediction are really dangerous. They actually, overall, they model profitably across the entire 3-month contract, but they very often you'll just get crushed if the market's advancing strongly for some reason inside the order flow, it looks like a failure, you get killed. And so I can tell you what's happening is that those trend days are the days where you're getting crushed, and when it's a quieter day, that's a reasonable code to take. I just took them out. They're too aggressive. I refuse to do it. If the market's moving strongly, I want to see a turn. I'm not interested in a failed pullback. That's kind of my view. And so what I've done is I've defined of all these different behaviors. Here are the different choices that the machine's going to give you. Here's a conservative set. Here's an aggressive set, and here's a set that's in between. All right. And so we're going to go over that next week. That's what, when we were looking on the spreadsheet, that's what this is. These codes represent, of the behaviors we see in the market, what are they and how aggressive are they, or how conservative are they? Daniel asks, so the pullback is the reversion to the mean and the turnaround is the extreme from the mean? Basically, yeah, except that when people talk about reversion to the mean, they usually have it flipped, Daniel. What they mean is that the market has gotten extended away from the average and then it's going to revert back to it. So people, generally speaking, they're considering reversion to the mean trading being, getting short here for that reversion to the mean. Okay, but yeah, essentially that's what's going on. Is the system using wave volume to help make decisions on reversal? Yes, it has the wave volume in it. How did I do on Friday? On Friday, I did really well, and then I gave it all back. So that was kind of what we were talking about. Control. Actually, I can't show you here because this is a replay using other stuff. You have to go watch the video. I was up nicely, and then I gave it all back. How often do you anticipate tweaking the system, and what would the tweaks encompass? Randy, my rules, my view of trading is that you don't make changes midweek. So the most you would ever do anything is on a weekend. And the changes that you would make would be how conservative or aggressive would you want to be? And that's really a function of what kind of market is out there. Is it super volatile or quieter? And I'll be telling you what I'm doing. That's part of what I'm I guess the service is conservative, aggressive, or moderate. I'm moderately aggressive right now is what I am. The conditions are pretty wacky and volatile right now, frankly. So not trading at all would be very reasonable. Anytime the NASDAQ has overnight point moves that are more than 60 ticks or 60 points, it's reasonable to not do anything. That's just crazy. That's crazy volatile. No, the logic won't change, Randy. It's just a question of how aggressive or conservative do you want to be. Here's what I saw. My belief was that I would see super volatile conditions and just not turn the machine on. And what I saw was actually, while you'll take more losses, you'll have more days where you get whacked. The other days, there are days where you can do really well because the machine just just takes trades. It's way better than me on those kinds of days. It's certainly fast enough to do it. That's not the issue. Clearly, the order flow still looks okay, even on those really volatile days, because I can show you replays of like February 2nd, February 5th, when it was absolutely insane. We sat here in the room and did nothing and just watched in awe. The machine just killed it that day. Other days that were really volatile, very quickly you got crushed and you were done. You hit your max loss very fast. So it's kind of it's a function of your tolerance for risk. Okay, so some people they just want to be conservative. All right, so and it'll be what it'll be. Humans are they are what they are, and so you say you're conservative, but then when you see the system miss a move or when you see you miss a move that the system predicted with a more aggressive code, suddenly you're tweaking things. So you got to find your balance. Yes, Dan, we're running live, and I'm in the room for the first 45 minutes to an hour. We're talking about it, so come join us. Last question here. Yes, Giovanni. So the machine looks at the patterns and makes a prediction. Okay, and then you choose how conservative or aggressive to be. What I did in batch simulation, I took every single behavior and modeled and simulated it to see exactly how does it behave. Is it profitable? Is it not? Is it good? And what you end up with is a group that you should kind of just stay away from, and a group that are, I don't want to say consistently good, but they're you don't get killed too often. Basically, is kind of how to think about it. But then you make less. So there's no magic bullet here. If you want to be more conservative, you're gonna make less money. If you want to be more aggressive, you have the opportunity to make more, but then you have to have a higher tolerance for risk, because on more volatile days, on the days when there's more movement, there's more opportunity. That also means there's more risk. Okay, this is just the definition of trading. Okay, and so it becomes a question of just kind of who do you want to be. So in the spreadsheet study here, actually, if you switch over to sheet 1, there's these 3 lists of codes that represent the 3 levels that I have. This is based on simulating each one individually, and then simulating the groups together based upon my view. Next week, we're going to dive into this in detail. But it's very organized. It'll make a lot of sense once you see it the way I've laid it out, in a nice little matrix that describes the behavior that's being predicted, and then the code that comes out based upon that prediction, and then what you want to do with that. Okay. Dan, if you're a member now, then you log in to the website and go to Members Live Trading Room, and it'll take you there. Wayne, if you want to learn about machine learning, send me an email and I will reply with exactly what you should do. Okay? I'll put you on exactly the right path. And very quickly you'll decide if you like that path or not. So you'll end up not wasting your time. On any particular day, can you just take long trades? Yes, Sam. So that's a great question. Every one of these codes starts with a 1 or a 2. If you only want to take long trades that day, then you just go to your spreadsheet here. Everything in purple, it represents a code that the system will act on. Just take out the 2s. Just clear that selection. You'll only take long trades that day. Just put them back if you want to take shorts the next day. info@therationaltrader.com. Al. You can just go to the website too, and there's a little contact page that you can get a hold of me. All right, gang, that's it for today. Apologies for the bizarre GoToWebinar issue. Next week, we're going to dig into action codes. We'll do a quick review again. I suspect there'll be more general questions again. And then we're going to dig into specific behaviors and then the action codes you get associated with them and kind of where I have them in the aggressive to conservative spectrum. I'm not teaching discretionary trading anymore, Paul. There's really not time to do both. All the old stuff is still there if you want to look at it, but I'm not actively teaching it. Yes, the long short codes can be changed intraday. Anytime, as soon as you make a change, it takes effect. All right, gang. Thank you. I will see you all on Monday. Have a great weekend.